Good morning, afternoon, evening, ladies and gentlemen. Welcome to our brand new series of Meet the Fund Manager, where we get expert insights into key themes straight from the front lines, helping you see the forest from the trees. Before I introduce our panelists on today's webcast here, just a few disclaimers to go through for compliance purposes. Keeps everybody happy and no problems later on. So with that said, Dunhill Financial is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale and or purchase of any specific securities, investments, or investment strategies. Investments may involve risk and unless otherwise stated are not guaranteed. Please be sure to first consult with a qualified financial advisor and or tax professional before implementing any strategy discussed herein. With that out of the way, I want to introduce Greg Guerin, Senior Product Specialist from First Trust. Good to have you here, Greg.
Thank you for having me. We're really excited.
Awesome. So today's theme really is about looking beyond the Magnificent Seven and how our clients can continue participating in some of those exceptional growth stories that we've seen in the last couple of months and years, really, like the AI and infrastructure build out. So with that said, is the Mag 7 the only game in town, Greg?
No, and not only is it not the only game in town now, it hasn't been the only game for the last several years. One of the companies we'll introduce you to in a couple of minutes, but it's just one of my favorite examples. There's a company called Prismian Cam, and I know I always love having talks with you and Brian because we get into such deep global ranging topics. And one of them, if we were sitting down over a meal right now, I'd be telling you about this Italian electric cable company founded in 1879. They beat the S&P 500 in 23 and 24. They were 2 to 3% weighting across that period in what we'll talk about in a little bit, the smart grid, which is an unbelievable opportunity moving forward. So no, the Magnificent Seven is not the only game in town. The electric grid is a phenomenal game. The smart grid, the amount of electricity we're going to need to electrify or build data centers or build rebuilding the global supply chains is critical. And of course, you're going to need electric cables to do that. So it's crazy to me that with all the time CNBC has, that they always talk about NVIDIA and the Mag 7. You would have thought somebody would have found it interesting that an Italian industrial stock with a PE of 16 beat the S&P 500 with a very obvious reason. We need more electricity. They sell electric cables. But you know what? They just keep talking about the Mag 7. So no, it's not the only game in town. There's a lot of games going on right now.
Got it. That's actually quite fascinating. And like I said, if we were sitting over a meal, we could probably spend all day discussing that. But when it comes to the theme as a whole, like you said, with some of the infrastructure build out and some of those electrification movements, what are your thoughts on actually this current administration and potentially how it intersects with clean energy? Is there still opportunities there, or actually is clean energy falling out of fashion?
Excellent point. In fact, it might even be going the other way. We've seen some clean energy companies catch a bid in the last couple of weeks. I think what we'll talk about in a couple of minutes, I'll share a number of different slides kind of fleshing out the smart grid theme. But one of the main things to highlight about the smart grid is that it's not clean energy per se. It is the lowest volatility clean energy index of the many popular ones that we've seen. And one of the reasons for that is that while it is obviously directly connected to clean energy, we need to change the grid. We need to add wind and solar to the grid, and solar is the fastest to deploy, cheapest to deploy on some metrics. There's some arguments there. But in terms of getting rapid deployment of electricity up and running, solar is one of the best. However, and I don't want to take too much away from my song that I'm going to play for you in a second, you'll see that there's a key item that's different. And what makes the grid different than, say, a green energy investment, and this all comes back up to your presidential or administration question, is that the grid needs to be more efficient regardless of whether the generation is coming from fossil fuels or renewable sources, right? And you could almost make the case that the more fossil fuel based a grid system is, the more efficient you'd want it, right? And so this is one of the reasons why the grid is basically generation agnostic, and everybody wants the grid. And then just to kind of showcase this, one of the first major things that Donald Trump did through executive order is overturn some of the Biden administration rules, which were you can build data centers. I'm oversimplifying right now, but you could build data centers, but you have to power them with renewable energy. Donald Trump's like, just build them, build them, connect to the grid, build your own, whatever you want. And we know that because of who's building them, you don't need to worry if you're terrified of a fossil fuel future, because Meta and Microsoft and Amazon are among the biggest greening companies in the world. And here's the other thing: if you're going to build your own energy needs right away, what you're going to do, regardless of who's the president, is you're going to build as much solar as you can, as much battery storage as you can, and connect to the net to natural gas. Because then that natural gas means you have something that's burning 85% cleaner than coal, always on to power up your battery whenever the intermittent things fail on wind and solar. But to level it way back up, this index that we're going to talk about in just a minute has been out since 2009. And so you can do your own due diligence on it and see, how did it perform under Barack Obama? How did it perform under Donald Trump the first time? How did it perform under Joe Biden? Suffice it to say, this product performed very well under both Trump and Joe Biden, and it in fact performed even better than under Trump than it did under Joe Biden. In fact, clean energy stocks, even the pure ones, performed better under Trump's first reign than under Joe Biden's reign, which leaves everybody scratching their heads. So it really doesn't really matter.
Gotcha. Fascinating insights there. I think it's sometimes the headlines get in the way of the actual hard data, and that's one of the beautiful things I think about First Trust is we get to the actual data there. Okay, so that's pretty interesting. On that theme that you were referring to there, Greg, on the grid infrastructure build out and such. Is that purely a US driven story, or is there more to it than just some US concentrated names in there?
Great point. This is actually one of the more diversified funds we have in general, but in the thematic world, it's definitely one of the more diversified products. A lot of the tech-driven themes, just by default, tend to be US dominant. This product, while the US is still the largest single country, it's only about 55%. I think 56 as of the slide that I'll show you in a minute. And so it is a global theme. And then on that point too, when people ask us about the Trump or Biden administration and what we think about that, it's like, yeah, that affects a good chunk of it. But remember and I got a couple slides to show you on this in a moment. The Inflation Reduction Act, the Chips and Science Act, and the Infrastructure Bill, they're law. They're laws of the land. Trump can't overturn them. And most of the money is spent in Republican states anyway, so he's not going to go after that. But that's just part of the equation. The Repower EU plan, which was put in place May of 2022 following the the Russian invasion of Ukraine, again, hundreds of billions of dollars will be spent on the grid, because it's not one grid, it's a global grid, and every grid around the world is segmented by country. And even in America, there are three grids. There's the East grid, the West grid, and the Texas grid has its own grid. But it's just an interesting case.
Fascinating. So I guess why don't we dive into some of those slides actually on if we look at, oh, there we go, we're asking for a share request there, so let's go ahead and get that underway. But why don't we dissect some of the hard data there behind some of those valuation metrics and also the story.
Gotcha. Now it's not letting me do my normal thing, which is to share a sound, which is fine. I'll try one more time just to see if we've been having, Cam, you saw me having some problems earlier. But you know what? For time's sake, I think this is the key. You can see the screen, right?
Yep, we can all see that.
Imagine the Back to the Future theme song was playing. What I tend to talk to clients about, because I really want to help make these things relatable, understandable, and something you can actually comprehend, right? This is not meant to be, this is for your clients. So we want them to understand what's so special about the grid, right? And one of the things is that the actual grid fund, the index, the smart grid idea, is a core thematic to three global megatrends. the energy addition. I call it the addition. Other people call it the transition, because we're not transitioning from fossil fuels to something else. All the fossil fuels we're going to keep using worldwide. We're just adding renewables to the situation. And so when you have something that you need to put somewhere else, right? But London's not moving, but where we generate wind and solar is changing. For example, in Plymouth, UK, they have built an underwater cable. This goes back to Boris Johnson, so 4 or 5 years old already. They've built an underwater cable to Morocco, right? Morocco has a lot of sun. The UK, not a lot of sun. So, and then they power it under the water through these high voltage direct current cables to Plymouth, and they can power hundreds of thousands of homes. It's amazing. So remember, there's three core thematics. Number one is what I call the energy addition. Number two is AI and the data center build out. And it's both sides. There's a lot of companies in this space that use AI and have been using AI for a long time. So you're actually getting an AI tailwind from some of these companies. We'll talk about them in a minute. And then similar to that, I call it the building stuff, but we'll call it the reindustrialization or the reshoring of the West. This rebuilding of global supply chains, which this year has only taken a mega move up from the American spending plans, the foreign direct investment that Trump is basically browbeating people to do, all of the things in the German infrastructure spend. Just this morning, we saw the European PMIs tick higher for the first time in a very long time. What's happening is that COVID started the shift where people realized their supply chains needed to be adjusted. Then Trump has just taken that to the next level. The point is we're building things. And if you think about it, what do you need to have a building? You need heating, ventilation, and air conditioning. It sounds really stupid, but that's what a lot of these companies do. But they do it in an intelligent way, because once you connect that to the internet, you can actually manage that through AI to be more efficient than it ever has been before. That's an example. Those are the three major core trends. And what I would have loved to have played for you was the Back to the Future music. So why is that? So if you've seen the movie Back to the Future, you know there's a little house or a little clock tower, right? And right up here, we get energy. It strikes at 10:04 on the clock tower. Now we know we're going to get energy there, but we don't need energy there, right? We need energy over here. I'm going to try to draw my DeLorean. It looks pretty bad. That's the DeLorean. We need the energy there, but we're going to get the energy over here. This is stupid, but many of you have probably seen Back to the Future. This is the problem. We need more energy in the data centers in Loudoun County, Virginia, where 70% of the world's internet traffic happens. We're building a new data center in the northern parts of the UK, just outside of Newcastle. It's going to need a lot of electricity cables and heating and ventilation and cooling and all of these things. We're building new things, but they still need to be connected back to the grid. And then we're trying to power them with brand new sources of energy that are being generated somewhere else. And that whole thing creates this massive multi-trillion-dollar opportunity. Cam and Brian are doing something phenomenal for you, for you clients. And this is one of the things we tell other people. They already know this. Too many people paint portfolio. So we believe that the canvas is your portfolio, your retirement portfolio, investment portfolio. The painters are Cam and Brian. And the paint colors, most people use FTSE 100, S&P 500, European equities. But they know that they can come to companies like us and go get much more precise colors to be able to find what they believe or what you believe have a higher degree of confidence in the near or medium term growth. I'll give you an example on this. This is a company called CrowdStrike. This is a cybersecurity stock. This has nothing to do with the grid. It's just a point. Donald Trump's major tariffs went in over here in 2018. Then came 2019, which was a bull market. 2020, which was a nasty COVID lockdown. Then a bull market in 21, and then a nasty bear market in 2022, and then a big bull market in 23 and 24. And some of you might even know in July of 2024, this company actually caused a pretty big IT outage. Point is, if you can call the right mega trends, cybersecurity in this instance, look at how much clearer their actual business grows. And this is what Cam and Brian and the team at Dunhill do for you, is they try to make sure as best as they can that these things are continuing to be intact. These can last a very long time. All right. This is Amazon sales over the last 20 years. So for us, the goal is to help clients find what we call nuclear submarines in a sailboat world. And we think the grid to be about one of the most obvious ones there is. A nuclear submarine that's below the water, it doesn't care about the headwinds or tailwinds. Okay. Headwinds and tailwinds is about a sailboat rocking around, but if you're below the water, you just move ahead. And we'll end this little bit with the amount of business that is actually expected to happen here as we move forward. Now, I did mention AI. I just want to check in on this with you and make sure you understood what I meant. Very big oversimplification, but if you're going to have an AI, if anyone's going to have an AI, you need data, you need computer power, and you need to have skill. You need to know what you're doing. Because what people do is they take this data, they then train it. This creates a model, a large language model, and then they make that better through what's called inference. I just wanted to showcase this for you. If you look at this framework, it then kind of stands to reason that anybody that had good data can build a good model. For example, Google. Google has a lot of good data. They can build a good model, right? Another group that has pretty good data are those companies that have been in business for over 100 years, helping other businesses lower their costs, particularly their energy costs. So a couple companies we'll talk about today: Johnson Controls, Schneider Electric. These are businesses whose main business is helping their clients spend as little as possible on energy, like a hotel. Okay, so let me give you an example. Johnson Controls was founded by Warren Johnson in Milwaukee or Wisconsin, America, which is a very cold and then sometimes very hot place. He was a professor and he wanted to keep his room at a good temperature. That's literally it. Necessity is the mother of all invention. And you fast forward all the way to today, and if you had very simple data like 10 years of somebody's energy use, pricing from the grid, weather patterns, insulation, you can create a pretty good AI. And another way to jump into this AI world is a lot of people are freaking out over the invest in side. Should I be investing in AI? Or we want to help you find ways to profit from the hype. Levi Strauss sold jeans to the gold miners. He made a lot of money. You probably don't know who found gold in San Francisco, and I'm not going to let you know just for some cognitive dissonance. You can go find out. You don't know the name unless you're like a history buff. The point is, Amazon, Microsoft, and Google, those companies are spending hundreds of billions of dollars this year, next year, the year after that. Hundreds. Who are they spending that money with? So I'll tell you, when you use this type of a framework and you go, okay, I'm looking to find people profiting from the data center build out. There's a company in our portfolio called Eaton. I'm just going to segment a quick idea for you, and then we'll get into some deeper dives. On the January earnings call, Eaton Corp said, we have increased our data center construction double the speed in 2024. Now that we've doubled the speed, it will take us 7 years to build all of the data centers we've already been asked to build. Okay? Then comes out this thing called DeepSeek, and then comes out this thing called Donald Trump's tariff card. And the most crazy economic environment I think we've ever seen other than COVID happened. And 4 weeks later, that same company came out and they said, we'd like to report earnings. In our data center construction market, we now have a 9-year build out. In that 90 days, regardless of what was happening in the backdrop, because these other companies are investing so much in data centers, there are companies that are profiting from that regardless of what's happening in a nuclear submarine in a sailboat world. Okay, let's talk about this. So when you look at this is a company called Schneider Electric, and this is a number of different areas in their business where they use AI. If you look over here, one of the ways they use AI is to help keep data centers cool. Many of you might have read that data centers and semiconductors use a lot of energy and they get really hot, so they need to be cooled. Do you know any businesses that have been keeping rooms at particular temperatures for a very long time? Johnson Controls, Schneider Electric. their data center businesses are booming. When you come here, we know we're going to need a lot more energy. How do you get that connected to the grid companies? But then you get one more step. Some of these businesses have been engaged in keeping buildings, the most energy efficient buildings that have ever existed. So now what's happening is so much money is going to buy NVIDIA chips. You asked about the Mag 7, right? That other companies are benefiting right alongside them. Because NVIDIA is like, hey, people now want to build data centers completely on our new chip. All right, forget about Intel, it's about us. But we'd like these data centers to be from the ground up the most energy efficient data centers in history. Can you help us? And in the business world, when you help somebody, you do it for money. And so Schneider Electric is working with NVIDIA to build these purpose-built data centers. Now, this is another company called Invent. This is actually a British company. It's 2% of this grid ETF that is in the index. And what we can see here is that Invent has a number of different things. In their data center portfolio, do you see anything you might need or have to buy if you were able to get some NVIDIA chips? So let's say this again, right? You want NVIDIA chips. You might end up with AMD chips or, God forbid, Intel chips. but you have to have a server rack. You have to plug it into the wall. It's this boring side of a hype cycle that can be really, really powerful because what you see is valuations tend to be lower, and then the risk tends to be lower. Now, the upside might not be as high as some of the upside, but that tends to work its way out with risk versus reward. Another thing that's interesting is with this data center build out, the U.S. went over to the Saudi Arabian and Middle Eastern countries, and they got some huge deals. One of them was this $600 billion investment from from Saudi Arabia. And you see a lot of the companies that made the headlines: Salesforce, Oracle, Google, AMD, Uber, blah, blah, blah. But this company I've highlighted here is called GE Vernova. GE Vernova was part of a company you know called General Electric. General Electric split itself off into their grid energy systems business, GE Vernova, and their GE Aerospace business. All right, let's just do a couple more slides on the grid infrastructure idea. Grid, the idea, is put together by somebody called Clean Edge. They're the oldest clean tech investment research firm in the United States. They're now 25 years in business. Ron Pernick is their founder, managing director, CEO, and he does webinars for us all the time. So the team, Cam and Brian, they watch these webinars where they get to learn from these experts in the field, notably Ron Pernick talking on this one about grid. And so just a couple summary slides so that you can learn what they learned. In February, Ron went through the 5 major drivers of the energy transition. In the next 5 years, we're going to have 3 times renewables. They need to go somewhere, and they're intermittent, so they're going to need batteries. Load growth is growing. What this means is for the last 30 years, basically, we've all used about the same electricity. We've just been using it more efficiently, thanks to the companies in this portfolio. But now, for the first time, load growth is going up. This just means demand for electricity is going up. I'm sure you have heard about that this year. Aging infrastructure is always a thing. There are natural gas pipes in Chicago that are still made out of wood. That is a fact. China, I like that this is just one of their drivers. China. They're just adding so much renewable energy. They're adding an America in energy generation every 2 years. And then, of course, over here, the renewable energy and energy storage learning or cost curves. Battery storage keeps coming down in cost. The grid is the great enabler. We used to have a central fire-based electricity system that sent out to the houses. Now, even houses are producing their own energy and have batteries. They used to be one directional. You lit it and it went straight out. Now they're coming both ways, right? A house might be putting energy back into the system, and you need to have kind of energy routers. That's what this prosumer is about. You used to have people who just consume, but now you can actually produce and consume. And then, of course, you got the conventional energy sources, but now you're getting combined with solar. Excuse me. And that's where you get this great convergence. Electric vehicles and storage. Electric vehicles have bigger, the Tesla car has a bigger battery than the Tesla Powerwall, which is their battery business, which is actually doing quite well. Electrification of the economy allows us to more monitor and manage the electricity use through AI. But then also through AI, we're going to need more electrification. You can see it's like this constant reinforcing cycle. Okay, this is one of the biggest problems with the energy addition or transition. It's called the solar duck. It looks like a duck. That's why they call it a duck. What this duck means is that in some countries where they can generate solar, they start generating at about 7 o'clock in the morning, right? Now we wake up and use energy, then we go to the office and we use it as optimally as we can throughout the day. Then we all come home and turn on the TV, eat dinner, and then we all go to bed, right? And then it starts all over. Now, in some countries and areas where you can generate solar energy, you can see right here, this area would be where we're generating more than we consume. And most places that can do this, like the Sahara Desert, for example, it generates more than it can consume. So we sit here and we go, batteries must be a phenomenal business. Yes. How many battery companies can you name? Don't worry, you don't have to, because Cam and Brian have found you Clean Edge. This is something that Clean Edge does. They map out the entire market. This is every battery company in the world. And then if they're of a certain size, they are in the index and the fund we are talking about. The grid really gets down to three major areas: energy storage, electric vehicle charging infrastructure, and smart grids themselves. When you add these three together, plus a thing called energy efficiency, that's more of a service, that's these two right here, you can see that we are expecting to grow just in the next 5 years from where we were at about $1 trillion a year to what's this, 2.5 to 5, about $2 to $3 trillion of annual investment. Way more than the fossil fuel industry makes up. And the innovations in this space are as fast and furious and amazing as some of the things you're hearing about from like a ChatGPT. For example, BYD, a Chinese electric vehicle infrastructure company, has created a $30,000 electric vehicle that can charge for 400 kilometers, which is about 250 miles, in 5 minutes. It's amazing. So here's the entire grid mapped out by Clean Edge, the expert. Software and intelligence. Smart meters are an amazing business, right? I'm sure many of you have a smart meter. Think of what that allows you to do and what the utility to do. Grids, utility battery storage, resilience, transmission and distribution, grid enhancing tech, and NGOs. So let's just get through this real fast, and then Cam will get back to any questions you got. So the Grid ETF tracks the NASDAQ Clean Edge Smart Grid Index. So NASDAQ, the world's biggest technology index provider, Clean Edge, one of the world's largest clean energy experts, they build this portfolio together. It works like this. Twice a year, Clean Edge delivers to NASDAQ a list of names that they believe to be pure play or diversified plays into smart grid, electrical infrastructure, or other grid-related activities. Pure play is where they think those companies get over half of their business revenues from those themes. Non-pure play is between 10 and 50%, or at least $1 billion in revenue. Then NASDAQ says, thank you for that list. We'll make sure the companies are over $100 million and trade enough to be what we call liquid. And then every quarter, we will rebalance this portfolio. So if you put 100 pounds in it, we're going to rebalance it back to 80 pounds invested in the pure play names, market cap weighted, where the biggest companies are capped out at 8%. And then the non-pure play names get 20% of the portfolio, market cap weighted, capped out at 2%. So no company can be greater than 2%. Back to your question earlier, Cam. 40, oh, we're below. Look at that. So we were 56. We're now below a 50% US exposure, showing a very diversified portfolio. The UK has a huge holding in this called National Grid, your grid company. Then you can come over here. You see we're 56% industrials, 20% utilities. Most people know tech is doing quite well this year. Tied with it in the United States is utilities and industrials. In fact, through the end of July, both the global index and the S&P 500, the two best performing sectors, were utilities and industrials. And then, of course, you can see up here the electrical products industry group, an industry group with no Magnificent Seven, but beat the S&P 500 in 2023 and 2024. Here's the portfolio. If you just want to see some of the names you may be invested in. In green are the names I've circled that are the pure play names that all got that 8% weight. That's Eaton Corp, the one I told you about earlier with the data centers. You probably know National Grid if you're in Britain. Johnson Controls. ABB is an amazing Swiss industrial, and then Schneider Electric in Europe. Then in blue, I've highlighted names that you've probably heard of before, but they're in the diversified play. Why is NVIDIA in here? Because how do you think these utilities and smart meter businesses are implementing AI? Or Schneider Electric and Johnson Controls. They're using them because NVIDIA sells a lot of the chips, Texas Instruments, a lot of chips, Qualcomm, a lot of chips to the grid. IBM also has a huge smart meters business. But if you ever want to know why any of these holdings are in the fund or the index, you can just go to Clean Edge's website, click on any index you want to see, and they have all of the reasons why every single company is in the grid, what they do, who they are, what their ticker symbol is. All right, couple quick outlook slides. Hey, you asked a question, right, Cam? Here it is. If you look, this is the grid index. This is under Obama 1, Obama 2, down. Whoa, look at that. 128%. Now, this one happens to be the pure play green energy. This one happens to be wind energy. I'm not joking. How head scratching is that? Clean energy had an annualized return under Donald Trump of 53%. Joe Biden, negative 18 per year. You can't make this stuff up. But we're talking about the grid today, where the grid you could see did really well regardless of who was president. 42% under Obama 2, 128 under Donald Trump, 55 under Joe Biden. One of the reasons that may be the case because of is that, in my opinion, Democrats get in their own way. Left-leaning side, I have a feeling labor does the same thing. Because they favor government regulation, they tend to do things like the following. This is a true story. When Elon Musk applied to launch one of the first rockets for SpaceX, the regulators made them kidnap baby seals, put headphones on the baby seals, and make them listen to rocket launch noises to see how it would affect them mentally. I'm not joking. Okay? It's that type of a thing. Oh, you want to build a 2 gigawatt solar farm. Have you checked how it's going to make this field grouse affect the habitat? Right? Whereas Donald Trump, whether he likes solar or not, he's like, just build it. Right? Now, you might not like that or not, but here's what I know. Look at this. There is more solar energy storage in application in the United States. So the Democrats passed these historic bills, the infrastructure bill, the Inflation Reduction Act, right, to go build more renewable energy. Then people go see, we can make money putting out a bunch of renewable energy. They apply to do so. And then the regulators take so long that just what's sitting in application is 2 times American electricity generation. So watch, under Donald Trump, you're probably going to see the fastest and biggest deployment of solar energy in history from a guy who you all well know is quite skeptical on a lot of these things. So this is the deal. Under Bush, you saw $30 billion of construction. Under Obama, you saw it rise to 50, and then under Obama 2 and Trump, it went up to about $80 billion. But then they passed the CHIPS and Science Act, the Inflation Reduction Act, and the infrastructure bill. And now we're sitting at close to $250 billion being spent in 2025, 2026, 2027, regardless of anything that Donald Trump likes or doesn't like. That's why Bloomberg has this energy forecast that the grid is going to grow by hundreds of billions. So this is just to replace transmission and distribution lines. We're already at $150 billion a year. Add in the new connections, we're about 200 up to 400. Add in these stabilizing measures, and you're talking growing from last year's revenue profile of $380 billion a year up to $800 billion. And I'll end with this, and we'll get to your questions. Most charts you see look like this. They're very smooth because they're forecasty, right? Oh, next year, and they just map, a 10% growth rate or something like this. Why does it grow like this and then flatline? It's because they have clarity on the infrastructure bill, the Inflation Reduction Act, the Repower EU, the UK's plans, Chinese plans, the South Koreans' plans, because people are spending on the grid now. And they're spending a lot more right now, such that it's about to double between last year and 2029. All right, Cam, thank you. Happy to dig into any questions you might have. And just for fun, our favorite slide.
Exactly, you can't forget the most important slides there. But those are some excellent insights as always, Greg. And I think really the takeaway here, just to land the plane, because I know we're a little stretched on time here, but maybe we can get a couple of questions in there. But really, the takeaway is that this grid infrastructure build out story. It's really international in nature, right? It's not just concentrated in the US, like you said. There's various different plans, both on the European continent, within Asia, and the US to modernize and bring the grid up to snuff. And on top of that, I think AI being the hottest trend, for a very long time, every country out there is racing to, dominate that particular industry. One thing I did want to focus on is we've gone over all those key aspects there, but how does this particular theme compare to the wider market when it comes to valuations? Are we sort of are we getting overlaps in there, or are we actually potentially getting exposure to some of those growth names, but potentially at more attractive valuations?
Yeah. So talk to Brian and Cam if you want to learn more about the words I'm about to say. But a lot of people will use a price to earnings ratio, right? What's the price I'm paying for every dollar of earnings per share? And then another thing that I really like to follow is price to sales. Some companies might be reinvesting a lot, and so they might lose some money in the near term for growth in the long term, and that can affect earnings. It might make their earnings really low, artificially low, and make their PE seem quite big. But that doesn't happen with sales, all right? And so we want to do price to sales to get an idea. And because these are largely industrials businesses, they tend not to get, the market tends not to get overly excited about the future, right? So what I mean by that is NVIDIA could sell 50 billion or 100 billion in a quarter. Whereas these types of industrial businesses, you can only build so many electric cables right, in a quarter. And the market kind of knows that. So to your point, I'll tell you right now, as of this morning, and just double checking, yes, we have this ratio called the price to earnings ratio. And the price for next year's earnings for the S&P 500 is 21.2, okay? And for the NASDAQ is about 30. So the growthier side of the market is about 30. The forecast, sorry, the forward earnings, price to earnings for the grid is 21.7. So it's basically in line with the S&P 500, but substantially cheaper than where most people have in their growth portfolios. However, let's check in with what the analysts think that E is going to grow. So you have a P divided by the E. How much is this E going to grow, right? And the earnings are expected to grow for the grid at 13% per year over the next 3 to 5 years. The S&P 500, which we all know is being driven by Mag 7 type companies, it's only expected to grow at 12.1 over the next couple of years. Now, those are basically the same, but it is interesting to see the grid is roughly the same PE with slightly higher expected earnings growth, but from non-tech sectors, right? We all know where most of that growth is coming from. So it's diversifying your portfolio to be getting global industrials and utilities growing that earnings 13% over the next couple of years. Then on that price to sales basis, the price for every dollar of sale the S&P 500 gets is 3.33. The grid fund as of last night's close is 2.5. And so it's substantially cheaper on a price to sales basis. And so those are really how we tend to look at things like that. And then you see these companies like we were talking about, like Johnson Controls and Eaton, they're sitting at forward earnings growth rates of 13.2, 13.6. That Prismian company I told you is expected to grow earnings at 27 and a half, and its PE is only 20. so, those, just to make sure we're not cherry picking here too. You've got ABB, that industrial giant out of Switzerland. They're expected to grow earnings at 6%. And so it's about being diversified. It's not saying every single one of these companies is growing at 13, right? If some companies are growing at 20 and the index is at 12, some of the others are growing less.
Gotcha. Perfect insights there. And I think, really, hopefully our clients here, got a little bit more context and clarity around how, here at Dunhill Financial, we build the portfolios and come up with the different frameworks there. And going to borrow, Greg, your little analogy there of, painting the canvas there. And I think it's ways, like complementing the portfolio with some of these certain thematic trends there where we're able to really, get some diversification, but more importantly, bring the overall valuation down in the portfolios, but again, maintain those strong earnings potential there. I always knew the couple of classes I took in art school would come in handy, but there you go.
Yeah. Nice.
Perfect. Well, it's a pleasure speaking with you, Greg, and fascinating insights as always. Hopefully, our clients found some useful information here in today's webcast because I certainly did. And once again, I want to thank Greg from First Trust and the entire First Trust team there for an excellent presentation. And until next time.
Thank you. I really appreciate your time, and thank you all for having us.